Trump just said some interesting things about NVIDIA, more importantly, the AI chip market in China. Now, if you are an NVIDIA and AMD stock investor, you're going to want to stay tuned as we are going to get a lot more details and confirmation about this 15% tax on AI chips to China. So let's take a closer look in today's episode. All right, so let's just start off here. We can see NVIDIA and AMD are both pretty much flat for the day, even though there was the excitement earlier on today about the China market opening up. Now, I still believe there is kind of a bullish take because 85% revenue is better than no revenue at all. And as we're going to see throughout this episode, the gross margin impact overall as a business is not going to be that crazy or anything to completely worry about, but it is something that you need to be mindful of. So first, I want to look at this video that Trump kind of showed today talking about this topic.
If I could, on China, your administration agreed to send the most advanced or advanced NVIDIA and AMD chips.
No, obsolete. No.
Obsolete chip. Well, and then 15% of the profits.
I mean, the 20s. No. This is an old chip that China already has. And I deal with Jensen, who's a great guy, and NVIDIA. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form, different name, but they have it. Or they have a combination of two will make up for it and even then some. Now, Jensen's a very brilliant guy, and Jensen also has a new chip, the Blackwell. Do you know what the Blackwell is? The Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible I'd make a deal, a somewhat enhanced in a negative way Blackwell. In other words, take 30% to 50% off of it. But that's the latest and the greatest in the world. Nobody has it. They won't have it for 5 years. But the H20 is obsolete. You know, it's one of those things, but it still has a market. So I said, listen, I want 20% if I'm going to approve this for you, for the country, for our country, for the U.S. I don't want it myself. You know, every time I say like 747, I want, yeah, for the Air Force. So I just wanted. So when I say I want 20, I want for the country. I only care about the country. I don't care about myself. And he said, would you make it 15? So we negotiate a little deal. So he's selling a essentially old chip that Huawei has a similar chip, a chip that does the same thing. And I said, good, if I'm going to give it to you, because they have they have a stopper, what we call a stopper, not allowed to do it. It's really known as a restrictive covenant. And I said, if I'm going to do that, I want you to pay us as a country something because I'm giving you a release. I released them only from the H20. Now, on the Blackwell, I think he's coming to see me again about that. But that will be a unenhanced version of the big one. Like, I don't know if you know it, we will sometimes sell fighter jets to a country and we'll give them 20% less than we have. You know what I mean, right? That's just it.
All right. So based on that, we actually got a lot of information that investors should consider. The first thing is we can see that Jensen's tactic to get this approved was first to let the current administration know that there is a form of competitive pressure in China, the Huawei, right, with their chips. And they mentioned that Huawei has a competitive chip, at least when you look at the H20. And remember, the H20 is a watered-down version. It's no longer the most advanced generation, just like Trump mentioned. Right now, the super-duper advanced chip is the Blackwell architecture. So we're not talking about the Blackwell. We're still talking about the Hopper. And not only the past generation, we're talking about the watered-down version. So the past watered-down version has competitive pressure. And that's how Jensen seems to have kind of helped convince the current administration that we should send that out because there's already a competitive product. Now, I do believe that indicates something that one of the biggest things that I've gotten in the last comment was, Jose, you don't know what you're talking about. There's no competitive pressure in China, and there is, and NVIDIA is going to be able to increase the cost by 15% and eat up this tariff of 15%. I don't believe that's true. I believe the pricing power is not there as it would be for the top generation, because remember, like I mentioned, it's not the Blackwell we're sending, it's a prior generation not only the prior generation, it's a watered down version of it that has some, not a direct competition, but some competition with it. Now, there are a lot of things that I found pretty interesting outside of there too. We also heard that Jensen is actually coming through to talk about the Blackwell platform, and it seems like the current administration is open to it if they send a weaker down Blackwell. We've heard about the B30, so maybe in the upcoming weeks we might hear of an announcement of the B30 entering the China market, so a watered down version of Blackwell. Now, those are the two main points and something we're going to have to kind of take a closer look into. Now, I also want to talk actual numbers, right? Because 15% seems like a lot. And many investors might be worried about, Jose, what does this mean for gross margins for NVIDIA? NVIDIA tends to have a gross margins of about 70%. Well, luckily, we can get that information pretty quickly. And using platforms like this is my favorite platforms. We're going to look at charts here from fiscal.ai. Check out my code at fiscal.ai/Jose. If you use that link, you get 15% off right off the bat for any of their memberships. And let me just say, it's extremely cheap. I use it on a daily basis and would 100% recommend them. So fiscal.ai, we're looking at NVIDIA. And here we can see that in forms of China revenue for the most recent quarter was $5.5 billion. The company did about $44 billion in revenue. Remember, this current tax is only for China sales, and it's not for all China sales. It's just for the H20. So what kind of market is the AI China chip sales? Luckily, here on fiscal.ai, we can also look at the transcript from Q1 of 2026 pretty quickly. And I decided to ask the AI summary, what were the numbers? And they mentioned in Q1, NVIDIA recognized roughly $4.6 billion in H20 revenue prior to the cancellation. So 4.6 billion out of the 5.5. So about 80 to 90% of total revenue in China comes from the AI space. But 4.6 billion is only about 10 to 12% of total revenue. So now we understand that the AI China chip market is about 10 to 12, maybe 13% of total revenue. Now that we have this information, we can actually get closer to see how the gross margin impact will be. So I decided to ask AI to help me to determine what the H20 margins were prior to this tax. So NVIDIA, luckily I follow this company so closely, I know exactly that they don't disclose this information. And NVIDIA doesn't disclose margins per product. But based on analysts and AI searching, NVIDIA H20 chip margins are estimated to be around 60 to 65%. Those specific margin data for the H20 isn't officially disclosed. So 60 to 65%, let's just say 60% on the bottom end, even a 15% tax hit will bring that down to about 45%, right? It's a direct percentage point hit. This is still highly profitable for NVIDIA. So even at a 45% margin on that market, you're still growing in revenue, you're still growing cash flow, you're still growing net income because it is a profitable. But it's definitely going to take a margin hit. How big of a margin hit? So again, I did the math, but just to kind of make it easier to present it to the viewers, if a product is 10% of total revenue, we saw that the AI China chips were 10% of total revenue. The company's total gross margins is about 70%. That 10% product is about 60% gross margins. What happens if that 10% product drops to 45% gross margins? What kind of impact will total gross margins have? Now, luckily, because it's a 10% of total revenue, it's very easily to calculate the math, but in theory, it's about a 1.5% hit in gross margins. So if you had 70%, it would drop down to about 68.5%. So you can see that it definitely will impact gross margins, but it's not a big hit. And again, you're getting so much more benefits from it, like more revenue, more earnings, more net income, more cash flow, and more importantly, you have the developer ecosystem with it. I'll talk about AMD in a bit as well, but we're going to see the numbers are very similar. So regardless, yes, I mean, you can complain about this being kind of mafia tax. It's one of the biggest comments I keep getting all over here, but 85% revenue for a highly profitable, for a highly free cash flow is better than 0%. And more importantly, it still opens up the ecosystem of developers for AMD and NVIDIA, right? Now you still have the Chinese market that's still going to continue to develop into the NVIDIA and AMD ecosystem. These are just some talking points, and pretty much I discussed all of them. The only thing I haven't really discussed is this one. We don't have an actual answer of where does this 15% tax go and how is it going to benefit the United States. Is it just going to be used to pay back US debt? I think it would actually be great if this money is used to go into AI investments for the United States. Maybe the United States government builds more laboratories, more facilities filled with AI servers. Because then you're saying, look, we're charging our AI companies to sell in China, but it's helping us invest more and more into AI infrastructure, which will in theory go back to NVIDIA and AMD, which tend to be, obviously the US products tend to have higher margins than China. So I do believe that could be a win if we start to see that. Some form of way to create even more and more tailwinds for the AI infrastructure in the United States. It could be maybe subsidies, maybe have some form of subsidies for building data centers in the United States, maybe some energy subsidies for AI data centers in the US. Regardless, if there is a way to increase investments in US and AI infrastructure, I do believe this can kind of even be a win-win situation for the chip makers. You get the AI market in China, and then you get even potential tailwinds and potential growth rates from the United States market. So that's what I am super, super curious about. Now, kind of jumping on AMD, right? AMD is flat, a little bit red, pretty much flat, but we did get some updates that AMD confirms US approval to export some AI chips to China. Unlike AMD, NVIDIA doesn't have to confirm it, right? Donald Trump himself confirmed it that yes, that is happening. But AMD did confirm it. And again, as we're going to see, I decided to go to AI to kind of get some rough estimates. AMD's MI308 margins are estimated to be around 50%, which is definitely lower than NVIDIA's. But regardless, 50% is still a very profitable product. And even if you drop it down to 35%, you're still making money, you're still getting cash flow, and you're still getting revenue growth, and you're still getting developers in your ecosystem. So it also makes sense for AMD. Now, AMD's revenue, unfortunately, they don't really break it down on a quarterly basis for where the China market is. But doing some quick reverse math here, thanks to fiscal.ai, what we learned about in quarter one and quarter two, we can estimate very similar that for AMD, the AI chip market in China is about 10% of total revenue. So very similar, since it is about 10%, the gross margin hit is closer to that 1.5 percentage point. So for both AMD and NVIDIA, it makes perfect sense. Gross margins could take a bit of a hit, but nothing crazy. And if you are an investor of these companies, you would say, sure, you might take a small hit in gross margins, but you're benefiting from revenue growth, from cash flow growth, from earnings growth, net income, pretty much the same thing. And more importantly, you're making sure that developers stay within your ecosystem, which is the long-term, in my opinion, biggest bullish case for both AMD and NVIDIA. Now, some final news here I have for AMD. TensorWave, which is kind of like a cloud provider, very small cloud provider, did announce that they do have the MI355's GPUs starting to run on their data centers. And TensorWave will be among the first cloud providers to deploy it, bringing next generation AI performance to builders everywhere. So just a nice bullish sentiment here for AMD investors with the MI355. Finally coming out in the wild. Hopefully we might hear more about maybe some of the big cloud service providers like Oracle talking about those going live as well. But regardless, I hope you guys got a lot of information. Again, if you are serious about investing, make sure to check out fiscal.ai/Jose for 15% off. And again, I use this platform on a daily basis. Take care, have a good day, and see you all next time.